So is Canada's housing market nearing a meltdown? I think that's a question that gets often asked, and never answered. Often prophesized. You have a lot of doom and gloom headlines because at the end of the day, it gets a lot of attention, it gets a lot of clicks, and maybe I'm participating in that a little bit by going through this article. But the idea is that we can predict a housing market crash, or we can predict um, consumer sentiment. I don't think we can ever really predict it in the future, but we can gauge where it has been, and we try to look at trends and use those to predict the future. But I think if anything, if you look at the headlines over the last 10 to 15 years, one thing that we're going to see is a fairly consistently incorrect predictions. So where are we right now when it comes to the housing market, and is it going to crash? Let's take a look at this article from Yahoo. 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 Anyways, how do you say it? And with Canada's housing market is a mess. I think we can all agree. Well, maybe not a mess, but it's interesting for whatever that means. Just look at a stock like, and just to be clear, I don't have any positions in any of these companies, not directly. I do have funds that I invest in, but which I don't really know if any of stuff is being held in it. But that being said, I'm not pushing any particular stock. Stock like Brookfield Property, and there's a reason why they're looking at this because it's a large property holder. They own they own a lot of properties, right? But the thing is, I don't know why they use it as a gauge for overall housing or property market, especially in Canada, given the fact that they are fairly well geographically diversified and even across different types of property classes, right? So um, it just seems like a little weird to use it. So anyway, so Brookfield stock is a great way to gauge the overall health of the property market. I'm guessing in the mean in a general sense. How have shares fared since the year began? They're lower by more than 60%. Ouch. I suppose so. Here's the weird thing. Canada's housing market hasn't been touched. Indeed, home prices have barely budged. That's not true. Home prices are up considerably year over year. I think in July it was prices were up like 14% year over year. I mean, does that sound like they haven't budged? So to be sure, single family homes are different from office skyscrapers. Oh, okay, I see. They're taking it as a overall average. But then even then that's kind of that's not really a good way to do it. But it's odd to see one section of the market tank while another section goes completely unscathed. This period of asymmetry may be over. There are some clear data points that should make you nervous. Nervous. The data is mixed. So, unsurprisingly, the housing market took a deep dive in March and April. Nearly everything did. Sales fell off a cliff, with overall transaction volumes hitting historical lows. Well, Corona, nobody's going outside, right? Nobody's walking into other people's homes. Nobody's buying things completely virtually without seeing the homes. Well, when I say nobody, I don't literally mean nobody, but this sudden and dramatic dip established a very low bar to clear. In more recent months, we've seen activity spike higher towards normalized levels. July actually set an all-time record with 62,355 transactions nationwide. Sales that month were triple that they were in April. Recall before the lockdowns, we were heading into the tightest spring market in almost 20 years, reported Sean Cathcart, a senior economist at the Canadian Real Estate Association. Korea. Ultimately, the market we're seeing right now is mostly the same when we were heading back into March. But we're not out of the woods yet. Canada Mortgage and Housing Corporation predicts 18% decline in housing prices this year. Okay, so we got like what, like 3 more months for their prediction to come true. Again, predictions, they're worthless for the most part. Um, I mean, you make decisions based on the data, but like how we're like like there's just so many things to take into consideration. What is the government going to do in terms of a reaction to this? I mean, what have they done to kind of keep the market afloat? Suppressing, keeping rates low or doing activities to suppress the rates, as well as continuing to provide some sort of income support. And a lot of people, I mean, if people aren't selling their homes, you're not going to be getting a lot of houses getting put on the market, so supply is going to be short. So yeah, maybe actually what's going on is a lot of people just aren't ready to move right now because they just don't want to take any risk. So should you be scared? The housing market is scary. This is a really simple game. Canadian housing prices remain stable after a dramatic plunge. Transaction volumes are rebounding, but with other markets feeling a ton of pain. Brookfield stock is a testament to this. So there's a tie-in. It's reasonable to be cautious about the future. So here's what you should do. And yeah, so this is actually pretty good advice. So first, get your financial house in order. Seriously, it's always a good time to do this. But if you own a home, it's now critical. Mortgage payments are fixed and could persist for decades. Your income levels, however, are subject to change, and with all the economic volatility going on, that's one of the reasons why it's so important to have multiple sources of income. Everybody can own a Shopify store. Everybody can start, doing YouTube videos. Everybody can start doing like affiliate marketing. There's a lot of different ways to generate income in another way. I mean, maybe that might not be enough to fully replace your income, right? But I mean, you can kind of piece something together so that over time you can you can generate like either a significant additional savings or or could even get to a point where it's enough to replace your full-time income. It just provides you with some stability. So when or if and when the economy stalls again, or if we have to go into another lockdown, there's no major uh, there's no major hit to your income. Um, Anyways, but that's just my thoughts on that. So it's now critical. Mortgage payments are fixed. Oh yeah, I just read that. So your income levels, meanwhile, are subject to change, especially with all the economic volatility going on. Analyze your biggest areas of risk when it comes to personal finances. Make moves to improve your situation, even if you're already in a position of strength. Like having debts, like carrying debt is one of the it just makes you weak, even though it's not always like on paper, it's not necessarily the correct thing to do isn't always to pay off your debts, but usually your credit cards and all that kind of stuff, the rates you're paying are usually going to be fairly high, so paying that off can make sense. But the peace of mind you get from not having debt to pay at the end of the month is just absolutely wonderful. Like once you have all that taken care of, you feel more stable and you don't have to worry about having needing to come up with that additional income to make sure you're staying in the black. So, having additional sources of income so that you can at least try to take care of all those additional debts. That's uh, that's awesome, right? Even if it's just making an additional $300-400 a month, that can be fairly significant in terms of what that'll do to help you take care of your monthly debt obligations. So even if you maintain a multi-decade time horizon. Oh, sorry. Second action item is to look at your investment portfolio. If you own housing stocks, yeah. Anyways, so the point is, they're saying that uh, there might be some sort of end of the day, what they're saying is there might be some sort of lag between the residential housing market and the commercial housing market. They're saying that the commercial side has taken a hit, and and because of that, they're believing that the residential market will be the next shoe to drop. But there's different pressures on the commercial and residential side. Like I said, with all these businesses closing down, there's going to be a lot less tenants, right? So they might have to leave, and their leases are up, and nobody's replacing the leases. There's no new tenants to replace those old leases. So what's going to happen then is the value of those properties drop, right? There's less demand. So and then less revenue, less demand, and so the value of the property is going down. So you end up having to write these things down with eventually, right? So yeah, I mean your portfolio would take a hit. So companies like Brookfield Property Partners or whoever, they would be feeling it on the commercial side. But does that necessarily translate into residential prices slipping, right? That's a great question. I guess that's more or less the question that they're posing, even though they're not really, they're more or less kind of stating it more so than asking a question. But so yeah, so this is from the Motley Fool. But I mean, really, their articles are more or less they pose them. The articles they just discuss particular stocks and things that they recommend or don't recommend. And but I thought this was a good question to ask. Is the commercial market any indication of what's going to happen in the residential property market? Anyways, hopefully that was something of value. So, like I mean, I have questions. I have more questions than answers when it comes to this kind of stuff. So, yeah, hit the subscribe button. Post a comment. I'm curious what you think. Like, is the market going to crash? Do you think the market's going to crash? Why? Don't just say yes or no, but like, why would it take a dive, right? So, anyways, I'm just kind of rambling on, but yeah, have yourself a great rest of your day. Peace.